And I would dare say that we're still stuck in this trading range of around 30,500 to 27,000. The other thing I would say is that leading into the potential default for the U.S. government, this is when Bitcoin needs to shine, right? We saw it shine or start to shine with the banking crisis. The potential for a default should be seeing even more price action to the upside. So these are the things I watch as a technical trader. Is if we're not getting a bigger move later this month in Bitcoin, I would start to get very, very bearish.
Gareth Soloway, the Chief Market Strategist of InTheMoneyStocks.com and VerifiedInvesting.com, recently shared his insights on the current state of the crypto market in an interview with Stansberry Research. With the arrival of the sell-in-May month, the cryptocurrency market is experiencing some turbulence. Gareth notes that the price action of Bitcoin has been relatively unremarkable lately, with the cryptocurrency hovering within the $27,000 to $30,500 range. He suggests that this range-bound behavior is similar to that of a bear market rally, and that a significant move above $30,500 is required to alter the current market outlook. What I mean by that is in terms of psychology of the market, this level is the top level to watch, meaning that if we can break it, that's very bullish. The lows are officially in on Bitcoin at US $15,700. If we can't, then for me, there's still an opening for Bitcoin to go down to the US $12,000 to US $13,000 level, maybe even below that, he said. Bitcoin falls below $27,000 as US regulatory crackdown pressures crypto's biggest market makers. Soloway attributes Bitcoin's meteoric rise to the banking crisis. Many people now prefer to invest their funds in Bitcoin. Gareth also touched on the subject of government regulation, which he believes is being held back until central bank digital currencies, CBDCs, are launched. Soloway questions the future relevance of stablecoins like Tether and USD Coin once CBDCs are in place, and how this shift may impact the cryptocurrency market. Before proceeding further in this video, make sure to hit the subscribe button below for more recent updates.
Chart, we have that trend line that I had in last time we discussed it, right at that 30,500 level. We pierced it briefly a couple times and then came right back in. And we've really gone into this sleeper mode. If you go back to, mid-March, we're still sideways in this 27 to 30,000 range. So to me, this is a level that is still reminiscent of a bear market rally. If we get above, like I said last time, above that 30,500 level, we can start to talk about maybe the low was 15.7, but as of now, I don't see that, and I still see speculation. I mean, in trading markets, including commodities and cryptocurrencies and stocks and everything else, bottoms are made when there's massive amounts of fear, and people are very skeptical initially when something takes off. With Bitcoin, it hasn't been like that. We've seen the speculation in Pepe coin and all these other meme coins. It's a casino, and that's not the sign of a bottom. In addition, I look at what's going on with the government regulation. The government's purposely holding back regulation until they launch their CBDC, which then brings into the question of, is Tether even worthwhile anymore? Is USDC, is that even worthwhile if you have a CBDC that's basically filling that job? Right. Does that have an impact on the cryptocurrencies as well? And then you go to the stock market. And again, I go back to the speculation, the valuations. Apple's trading at a 28 forward PE. That's ludicrous. We have to see speculation come down. I think the stock market comes down, and therefore it brings crypto down too.
The expert believes that the surge in speculation around these coins is a warning sign of froth in the market and could indicate that a more significant dip in the overall market is near. As per the Federal Reserve, a key benefit of a CBDC is to support faster and cheaper payments, which now will already be achieved via the FedNow system. Cryptocurrencies such as Bitcoin have made a significant impact in the industry, and the introduction of the digital yuan in China will likely provide the country with several advantages that other economies may not yet have realized. The U.S. government is also following in China's footsteps in exploring the potential benefits of digital currencies.
Retail investor is still in the mindset that the Federal Reserve will come to the rescue. All right. So again, we've been conditioned. It's almost like ringing a bell and the dog comes to the food. Same thing is true for investors. Investors have been conditioned since 2009 that the Federal Reserve, any sort of big hiccup in the economy, the Fed will come out and print money. And so what we see buy the dip continuing. We see it in crypto. We see it in stocks out there. And that's creating this false sense of security, or what I call complacency. At some point, that kind of mindset of the investor will shift dramatically. So again, to me, that's where the market has a lot of issues in the future over the next 6 to 12 months. The U.S. government is following the Chinese play. Now, the Chinese, what did they do? They banned Bitcoin, and they said, okay, let's launch a CBDC, the digital yuan, and they had to ban Bitcoin because they didn't want the competition for the CBDC. They wanted the digital yuan to gain traction and start to be used as a currency, which it is now. It's being intercontinental. We're seeing trade with China being conducted with many countries with the digital yuan, right? So that was their playbook. And now look at what China's doing. China's actually saying, okay, well, now we'll allow people to be involved in Bitcoin again because we have our foothold via the digital yuan. The U.S. isn't about to ban Bitcoin, right? That's not going to happen here. But how are they doing it? They're doing it in a different way. They're not allowing regulation. They're not giving any guidance on regulation. We know, is it a security? Is it not a security? Even Coinbase, right? Coinbase has said, hey, we may have to leave the U.S. They're suing the SEC to get clarity, and the government's just like, nope, we're not going to give you clarity. So this is the way the U.S. government is handling it until they launch their CBDC. So I'm in the full part now. Until we get a CBDC from the Federal Reserve, I don't think you're going to get regulation in the crypto markets in the United States, and that's done on purpose. The bottom line is that there's a real threat. Governments view Bitcoin as a real threat, and they want to get their foothold. China did it. Now the U.S. is trying to do it. Absolutely no doubt. In fact, I read something about some FedNow, which is going to be a digital payments form, right? And so that's essentially what they're trying to launch here. And basically, again, what the U.S. government wants to happen is they don't want people using Bitcoin to transfer wealth. They want it done through their digital currency, so it's easier to track and it's easier to monitor. And again, I don't blame the U.S. government for doing it. If I was in that position, I might do it as well. It's just, again, it's being shady to the crypto.
As Soloway said, I do think that per the charts, and I've been bullish on gold for the last couple of years, we should break the all-time highs at around US $2,075. And I think by year end, you're looking at US $2,300 at minimum. And I think really US $5,000 within a year or two is very, very possible. This should be the new bull market here in asset prices, if you will, and I think it's long overdue. Gold smashed through the US $2,000 per ounce mark in early April, and since then, it's held close to that level. As per Soloway, with the yellow metal perhaps poised to move much higher, market participants will have to be ready to position themselves advantageously in the new paradigm for gold.
Chart perspective, gold is behaving beautifully. You know I've been a huge bull on gold since last year even. And again, what we see is it's now hit what we call a triple top on the chart. A little pause here is normal. Triple tops usually get broken to the upside. So I think you're on the verge of a bigger breakout. Doesn't mean we can't have a pullback to the 1900 level here, but for the most part, if I'm going to be in a place, and we talked earlier about where do investors hide, I think cash is a place, I think gold is a place, and then I think that there are specific areas elsewhere where you can kind of find safety as well, but you got to be very careful about the equity markets as well as the crypto market. I think 2300 would be a perfect target, and then I think in 2024 you're looking at, potentially 27 to 3,000.
Earlier this week, Bloomberg reported that Jane Street and Jump Crypto, two of the biggest crypto market makers, will take a step back from crypto trading in the U.S. as the country's regulators continue their crackdown on the nascent industry. Bitcoin hit the $30,000 level 1 month ago for the first time since June and has struggled to break higher for longer since then. It's been floating between that threshold and the upper part of the $26,000 level since then. Investors have been unfazed by the down moves, however. Chart analysts, including Gareth Soloway, has been watching $25,200 as a key threshold before worrying about a more meaningful drop down. Do you agree with Gareth Soloway's perspective about Bitcoin and gold performance and what 30,500 level means to the crypto market? Share your thoughts in the comments section below. If you found this information helpful, then like this video and subscribe to our channel. We will bring you more updates in the future.